Thanks so much for tuning into this earnings conversation with Pavitra Shankar of Brigade Enterprises. Their numbers relative to what they did in quarter 1 and even in absolute terms relative to what Bloomberg estimates were much, much better on the bottom line front, on the revenue front as well. 55% uptick in revenues. Margins, they can change every single quarter depending on what's happening to bookings and to raw material costs. But on the whole, much better than estimates. Pavitra, great having you. Thanks for taking the time out. And to you and yours, a very happy festive season, a very happy Dhanteras and a great new year.
Thank you. Same to you, and nice to be on here again.
Thank you so much. So last quarter was a sea of issues, registrations in Bangalore, approvals and OCs not coming through. And you had cited all of that and you had expressed hope that maybe some of those could get resolved in the second half or the second quarter. Are we seeing signs of that because of which you've clocked in a 50% uptick in revenues?
Yeah, definitely. On the registration front, that's what's really impacted. We needed the registration server, or basically the sub-registrar's office. They had a new software that had to settle down. So once all of that happened, we could actually take up registrations on a faster pace. There was like a guideline value change. So a lot of those things had to settle down. People were still ready to come for registrations. It was just logistically difficult. But once that all settled down, which is pretty much at the beginning of July itself, we were able to take a lot of registrations for one of our large township projects that the first couple of phases has come up for handing over. And due to Ind AS, that's kind of when we can recognize revenue. So only upon handing over and actually registering the unit to the final customer is when we can show it in revenue per se. So that's kind of why we were able to show a jump in revenues, whereas typically our sales booking is like a sort of a leading indicator of what's going to happen, right? Assuming that all construction happens on track, and then down the road, maybe 3 to 4 years, we'll be seeing that in revenue. So that's what we're seeing today in terms of the revenues, and thus profits also are up.
Is there a firm change in trend of sorts out there on the registrations front, and then couple that with the kind of pre-sales that you might be enjoying? Are you constructive on the second half?
Yeah, I think the desire to register will be there because prices have gone up. So the properties that are coming up for registration today are the ones we sold in, say, 2019 and so on, 2019 over the course of that, the projects that got launched then. So typically you will see, first of all, Bangalore is a market where end user demand is generally high. It's not a speculative market. So even if investors are there, investors are people who want to hold the investment from a rental perspective and eventually appreciation. A speculator is there in the market to just buy at the time of launch, and at the time of sale, they don't want to incur the registration expense. So they look if they can resale, right? So, but typically people will not resale if they feel the value has not appreciated enough. We don't have that problem this time around. People want to register their units or resell it, and the next buyer will typically register it because the price run up has been incredible over the last few years. Of course, dramatically over the last 12 to 18 months or so. So I think as we continue to hand over projects, and we have a strong pipeline of projects coming up for OC and handing over, we expect to see at least 80% of them going ahead for registration. There's always the last few that you have to pursue, to come to the registrar's office and actually go through with the transaction.
So second half, suffice to say, I mean, I'm not pinning you down to a number, but you expect it to be strong.
Yes. Yeah.
Okay. Have you given a formal guidance? Sorry, I'm just trying to, if I missed it.
No, we don't. We don't usually give guidance.
Yeah, just visual. So I haven't missed it, which is good. Okay. The other aspect, Pavitra, I mean, the base effect for your company, for companies in that region, is obviously high now. I heard you say that prices have moved up quite substantially, or have moved up. Let me not put words in your mouth, but have moved up from 2019 to 2023 as well. Could these impact revenue numbers, growth numbers in the year 2024 to come?
Yes. So first of all, price has increased across the board. I can't say it is just Brigade. But I think
Bangalore, yeah.
across the board it has happened. Bangalore, Chennai, and Hyderabad also. These are all markets in which we have a presence, and I think that follows what's happening across the country. The sector itself is in that upcycle, so we're seeing that happen. So all of us are looking to launch projects where we can to grab this trend, right? So because you can still sell into a price increase kind of market. So I think that does bode well or does look fairly positive in the rest of FY24 and the beginning of FY25. So we are fairly confident that this will continue for the next 2 to 3 years. Like from a medium term perspective, we are pushing to get as many launches out as possible, signing up new deals, and of course, as working on the newly acquired lands to actually enter the pipeline ASAP. So it's a factor of just, ensuring that we do the work and the planning as quickly as possible. And also approvals need to, come quickly so that we can meet this demand that's there.
As somebody who's running this business, looking at it not from a 1-2 year perspective, but slightly longer as well, tell us, how do you think of this? Because, the last 3 years, we've been a bit of an upcycle for real estate for sure, if not for some of the other sectors. One, how long can it last according to you? Part two, as much as we think that we've hit some bit of a high base, suddenly news flow comes out. I mean, Google is setting up its largest headquarters outside US in Hyderabad. There's such stuff happening in Chennai. We all know the story with Bangalore. How long can this juggernaut last?
It's tough to say how long it'll last, and it's also difficult to plan, right? And assume that a bull run is going to go as far as it can. So the only thing we can do is to support what we think is happening out there with as much on-ground data. And for us, while there's a lot of global macro things happening that can be worrisome, nothing can argue with the fact that our launch sites are thronged with people. Our under construction projects also, like we have very healthy walk-ins. We don't need to spend too much on marketing expenses to drive people to follow up on, to push people to drop in leads or to walk in. They're doing it on their own, which is something that is very different from the previous few years. So it's hard to argue with what you're seeing on ground. Of course, we know that all of that can just disappear in a flash if there is a major, very bad shock in terms of politically or, I mean, internationally as well. So the only thing we can do is continue to look at new lands on a reasonable sort of underwriting. Go for projects that are basically good location and have good title, and just do the basics. Make sure we are delivering properties that are good quality and meeting our customer satisfaction and expectation, and continue to do that. And what will hold us through any cycle, if there is one, is just being financially conservative and making sure we've not overextended ourselves. So the desire for growth is there, and I'm sure at some point we will be hitting that cycle. It is inevitable after all. The question is, will it come in 2 years, 5 years? Are we lucky, and does it go on for 7 years? We are keeping our eyes and ears open to watch the trends on that.
Okay, 2 more questions. One is, when I look at your overall numbers and then the segment-wise contribution, operating profit contribution, clearly leasing the revenue contribution is not as high as, say, maybe pure play real estate or hospitality, obviously, but pure play real estate. But the contribution to operating profit is pretty high. Is this a standard, or is this a phenomenon for this quarter? Part one of my question. Part two, if this is a standard, do you plan to increase the lease portfolio in your overall portfolio for the annuity income?
So in general, the leasing business is higher margins. The EBITDA margins will be higher because typically you're just looking at the running expenses of the property. And it does hit in terms of interest costs and depreciation and so on. But from an EBITDA margin, it's generally much higher. So for the rest of the business, as a contribution to the entire portfolio, the leasing business will continue to be, today we're around, 40%, less than that, about 30% of it by revenues. And I think that's more of a denominator effect. Real estate has really sort of ramped up. And we are still looking at developing more office projects, but of course, on an opportunistic basis, we will have to find the right partner in order to develop more office space because it's very capital intensive.
Yeah.
So when we're looking for new office projects, it's typically, again, the same thing. Like, is it a great location? Can we build a project or a product that companies will want to relocate to because of the quality, the design, the sustainability, and so on. So we don't have massive plans for the office sector to, overtake the residential, but it will continue to be a part of our multi-domain strategy, the same way as the hotel group. The hotel sector is also part of our growth strategy.
Yeah, I mean, so hospitality, I saw your occupancies are still at 73% and probably intending to go higher. Multiplexes are doing well. So great one out there. Because I have paucity of time, I'll not go there. Maybe we'll go there the next time. I just have one more question though. And one of the newspaper reports a few days back suggested that the center may be considering the amendment of the SEZ Act. Now, I presume that if that were to happen, it is a bit of a trigger for you for some of the spaces that you have, if I'm not wrong. Can you talk about that?
Yeah, so we have been hoping for some action on that front for a long time now. We actually have fully leased up our entire lease portfolio, so office retail, obviously. But a lot of that was SEZ. So we don't have vacancy in the non-SEZ portfolio. So we were really hoping that there would be something on the regulatory front where it would give some incentives to companies to actually go into these SEZ spaces, even though the sunset clause had happened back in 2020. But we can't really pin our hopes on that anymore. We've slowly been chipping away at it. This past quarter, we actually were able to do a decent amount. We did 0.3 million square feet, which is around 10% of the Bangalore market share, of 10% market share of the Bangalore absorption. So we were quite happy with it. And we'll still continue to keep chipping away. I mean, I wish it could have happened faster, and that would have certainly helped if we had some kind of regulatory push on that front. But I think we'll still go ahead and fully lease up. The products are brand new. They're fantastically designed. I know all of our existing tenants are very happy with the facilities and all of that. So it's a matter of time. And unfortunately, we didn't get the support where it could have been done faster.
Well, let's see if it happens in Q3 or thereabouts. But Pavitra, thank you so much for taking the time out. Congratulations on a very strong Q2 performance, and wish you all the best for an encore or maybe more in the second half.
Thank you so much.
Okay, and to all my friends in India, so personal friends and clients and all the media friends, I wish you a happy Diwali, a very colorful one that will bring you light, peace, and joy to you and to your loved ones. Thank you.